So in the last video, we looked at the importance of the monthly time frame in swing trading. But most swing traders will just swap between the weekly time frame and the monthly time frame. They're missing a key time frame in between, the 2-week time frame, and it's an amazing time frame to track if you want to effectively swing trade. The reason is it gives you these amazing AMD patterns, which are very straightforward to trade if you get in at the right times. Secondly, it offers that bridge between monthly candles and actually your execution. So it can act as that trigger to knowing when to get into the right trades at the right time. So let's just cover a bit of theory on why 2-week candles matter, what to look for when looking at 2-week candles, and then get onto some examples in the charts, building on what we already know. So as I said, the 2-week is the missing time frame. So don't skip between the weekly and the monthly. Make sure you cover weekly, 2-weekly, and monthly. It bridges the monthly and weekly time frame. So it's refining monthly bias, turning monthly bias into actionable setups. It's also optimal for 12-hour execution. You get a lot of clean swing entries if you just want to check the charts twice a day and get on with your life or your job or see your family and properly swing trade with effective targets in the market. Clean execution on the 12-hour. Clean targets on the 2-week. It's also amazing confluence when used in conjunction with the weekly time frame. Weekly can sometimes look messy. 2-week provides the real structure. Or what we'll go on to talk about, especially in the next video, is weekly is actually in conflict with the 2-week. So you need to wait until you get alignment and then you trade. So let's move on. So what does 2-week look like if you look at it in context of the monthly candle? Monthly candle in the background, so you can see we've got a bullish monthly close. What does the 2-week then give you? Gives you the context to take a trade. So if you're getting a manipulation candle on the 2-week time frame nested inside of this monthly context, you're still looking for longs, continuations. You're not expecting the next monthly candle to distribute lower. You're seeing this type of pattern on the 2-week time frame. So that's why it becomes this bridge between monthly time frame, I think that price is going to go up, and okay, we're actually manipulating. This is when we're going to go up. What to look for? So just like in the monthly video, you need to understand the phase of price that the 2-week is in. Are we accumulating? Are we manipulating? Or are we distributing? And does that align with the monthly context? Secondly, if we are manipulating or distributing, are there exposed targets on the 2-week time frame that price can gravitate towards? If yes, that's a great sign. Okay, we've talked about alignment. Bonus, does the weekly confirm or conflict with the 2-weekly? So we're going to talk about this in a lot more detail on the next video. But if you start to truly understand these things and what to look for in relation to swing trading the 2-week time frame, you can consistently hit winning trades. So let's just start with what we covered. We saw this 2-week AMD. So if you're just joining us here, we're looking at 12-hour price action and we're trading weekly, 2-weekly, and monthly swing trades. So in this particular example, we have 2-week candles sitting behind our 12-hour execution. So what we saw is that price raided or broke out below this 2-week accumulation candle. So we saw price initially shift bullish and then target the low of its previous candle. It then failed to go lower, shifting bullish. We got more bullish momentum in the market. And then where did we trade to? We traded to the high of the 2-week accumulation candle. Tying this back to the monthly time frame, we just take this away and add the monthly time frame. Why did this make sense? Because we stung into a monthly low. So we had monthly candle, we traded into the low of the previous monthly candle. We then are anticipating, okay, we're either going to distribute lower because we're manipulating off this high, or this is going to be our reversal. Okay, so what is the 2-week doing? Okay, we get a close inside of our previous 2-week candle range. So what target are we now getting exposed in the market? The high of the 2-week accumulation candle. So price then gravitates towards that point in the market, and that's what we can trade. We've already looked at how we can trade this, so I wanted to bring up another example of this. Exactly the same thing happening now on GBP AUD. And this is also building on my actual trading routine, which is I'm not just trading one pair, I'm trading a lot of different pairs because we're looking at higher time frames. So if you're worried about setups not appearing very often, they appear every single day in the market. Right, what do we get? We get price accumulating right here. It's actually reacting off this low. So we get very bullish momentum into the market, bullish price legs, but then price closes inside previous candles range. Okay, so what targets are now being exposed in the market? We have manipulated a previous candle. So we are in the manipulation phase here. As soon as this candle closes, we're now going to look to distribute. Where are we going to distribute to? This low, first and foremost. Okay, what's the alignment to the monthly candle? Interesting. We have swept above a previous monthly candle. This monthly candle closed below its previous candle. So once this candle closed, we're expecting lower prices. But what we see is bullish momentum in the market. So we can just wait for 2 week to align with our monthly context. Sweeps the high, closes. We now have an exposed target in the market. But actually this candle closed bearish. It's already been swept. So at this point, the low's already been taken out. So this is classic continuation trade setup, because if this low has already been targeted, what's the next target? So probably on a higher time frame, and it's much lower. So we can start to look for shorts as soon as we get these shifts. We get this bearish fair value gap right here. Then we get the formation of a new bearish 12-hour order block. So as soon as we see this getting closed below, buy to sell, we can set our limit order right here on the order block. Either cover the order block itself or higher, it's completely up to you here. And first target is the low of the 2 week accumulation candle. We've got a 2.45R trade, but we know the monthly is targeting lower. So we can just hold this, and then eventually what we see is that we get the formation of a bearish fair value gap. So that might be a logical place to take profit. You know, we can talk about that in a lot more detail later on, but you see there straight away you've got a 3.68R trade by using 2 week to actually execute on your monthly bias. So if we come back here, we've got 2 week CRTs or AMD patterns playing out perfectly in conjunction with the 12-hour time frame. Now on the next video, what I want to look at is how to then use the weekly time frame. And the reason for that is if you look at this 2 week CRT or AMD, you've got accumulation candle, price then runs into the high of the candle, closes inside previous candle's range. That's amazing. Check monthly context. Okay, we have a previous sweep. We're expecting distribution to at least this low. So when we bring back the 2 week and we get this close in the market, we're expecting price to trade into internal range liquidity and then distribute to the 2 week exposed target, which is exactly what happens. But if we look here, we do get some bullish structure. So we get this order block, just gets traded through. So does this order block, gets traded through. So internal range liquidity here does not get respected. So if you're short here, expecting fast distribution, you get stopped out. Why is that? That's where we need to look at the weekly candle to get further confirmation on timing our trades. And that's exactly what we're going to look at next.